Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. There's very little that is new to say this week, as virtually all of the FANGs are up modestly this week, but all remain in their respective channels. I have, however, reviewed NVIDIA in some depth, because the mathematics that underlie our SVA methodology are highlighting the fact that the HB8 valuation level may be all that is available for any and all common shares. I am therefore changing our rating on the shares to a sell, as the risks are soaring here. Anyway, I will discuss the reasons in detail for our rating change for NVIDIA in the recap segment today. For now, let's take a close look at all the FANGs and what went on this week. As always, before I do, I'd like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. And if you'd like to learn more about our valuation service, go to www.strategicanalysis.ca. Okay, let's start off with Amazon. And what do we see about Amazon? Well, it firmed up this week, and it's been riding nicely along its bubble price. And as long as it keeps on doing that, it is giving you a nice, steady return. Alphabet has been moving up towards its bubble price, and that, as I have showed you before, has been all for about the past 15 years. So I don't expect more than that. However, what have we got here? Well, almost 10% to go. So I wouldn't be doing anything with my Alphabet right now. Microsoft is moving back towards its HB2 price, which has been riding now for some period of time. And as long as it keeps riding that HB2 price, which by the way is 12 times book value, that's giving you a nice a nice return of around 22% compounded. So we have nothing much negative to say here about Microsoft. Netflix is moving back towards its HB2. It had a nice earnings surprise, which knocked the shares down, surprisingly enough, but they've clambered back up again, and they're moving back towards that HB2. Now, I would want to watch very carefully to see whether the stock can break out here, which is another issue, but it has been higher in the past. Meta, well, we've been watching Meta struggle, haven't we, on either side of its bubble price at 7.4 times book. And in the past week or so, it has clambered back on side over its bubble price and is moving slowly but steadily higher. So as long as it stays here, we got to ride with this stock. Apple had a lovely jump, didn't it, eh? Well, they had a nice announcement, and it looks as if they are using their AI applications to good effect. We'll have to see, of course, if it comes through in the actual sales and earnings numbers, but for now it has certainly caught the attention of the investing public. And by the way, if I assume that they're continuing to buy back shares, and therefore the HB6 33 times book value actually holds, we don't have that tick up, it flattens out, then the shares have broken out. Tesla just continues to ride between its HB1 and its bubble price. That's 7.5 and 9.5 times book value. You know what I feel about Tesla, and well, we'll go from there. Finally, NVIDIA has soared even upwards, and has got to its HB8 price. And one thing that you will note when you look at any and all of the FANG charts, all of our charts end at the HB8 price. And there's a sound theoretical reason for that, which I will discuss in a moment. Now, in summary and to recap, I'm really going to start off with why I would issue a sell on NVIDIA. And I have not 1, 2, 3, 4 reasons, but 6, and actually perhaps 7. So, number 1, let me start with valuation, which is to say price, measures, all of which point to massive risk. First, as you can see from our SVA chart, the stock is trading right at its HB8 price, or 53 times book, the maximum valuation that our charts can show. More on that in a moment. Second, the price to sales ratio stands at, I was going to say roughly, but almost dead exactly at 37.8 times, which by any standard is very, very high. Finally, the PE ratio, the price to earnings ratio, is 41.5 times, a PE that is very difficult to find among most stocks. So, from a price point of view, you can see that NVIDIA, well, it's expensive, but let's go and take a look at some fundamentals. Number 2, competition is heating up in the semi industry. Now, NVIDIA may have the Cadillac of chips, but cost is a huge factor for most users of chips, and Volkswagen price chips is all that many would want and can afford. We have just seen the Broadcom numbers for their AI chip sales, and they are eating NVIDIA's lunch at the low end of the market. And there are several other companies in the same boat now. Number 3, 2 of the big users of NVIDIA chips, Microsoft and Alphabet, have both announced layoffs at their data center, cutting hundreds of jobs in the process. So even the direct beneficiaries of the AI trend are tightening their belts. Now, number 4, why would they do that? Well, according to Sequoia Capital, so far, the total additional revenue associated with AI is some $3 billion versus the $30 billion spent buying the chips. Something doesn't compute for the business. Number 5, I do need to point out that the semiconductor business is very cyclical, as you can see if I show you the long view of the semi stocks, which I'll do next week. The innocent and naive of investors may not know this, but the pros sure do. It's already late in the cycle, and I suspect that at the least suggestion of a typical cyclical slowdown, sell orders will pour in. Number 6, our own mathematics tells us that the shares have reached a maximum defined as the theorem of the limit in accounting dynamics. I have only seen 2 other companies, both high technology, that got this high. In both cases, we put a sell on the shares, and indeed, that turned out to be all she wrote. In sum, using the SVA numbers, the probable downside risk for the shares is for a decline to its fair market value, or $40. That's a decline of 69%. But in a bearish market, the probable minimum downside target would be at least its bubble price, or minus 86%, and maybe even lower. If you would like a 7th reason, I refer you to an excellent book by Annie Duke entitled Quit: The Power of Knowing When to Walk Away. She also wrote another superb book, Thinking in Bets. And the term betting is appropriate for what you are doing when you gamble on valuations with such poor investment fundamentals as you are today with NVIDIA. By the way, I'll be on BNN on Monday morning at 10:20 with the same message. I'd like to add that some 24 years ago, in June of 2000, I also took a shillelagh to Nortel. By the way, the same percentage downside risk as what I saw then as well. Anyway, that's all I really want to say this week. As far as the rest of the FANGs are concerned, with no sell signals and everybody riding their positive channels, I still expect a positive start to the market heading into the summer. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager of McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you, well, hopefully maybe on Monday, but if not, next Friday.